The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, soybean meal, definitely the star of Friday's trade. We're going to talk about that and how this week of trade is wrapped up as we bring into Market Talk our good friend Ted Seifried with Zaner Ag Hedge joining us here today. Ted, always good to have a conversation with you, my friend. I hope things are going well.
Yeah, things are great, Jesse. It's always a pleasure to be on the show. Really enjoy doing it, so thanks for having me on.
Well, as I mentioned, soybeans and bean meal, I suppose we should start there. Big gains to round out the week in beans and meal. I know we saw huge soybean meal exports here this past week. And beans, Novi beans getting back up and flirting with that $13 mark on the day Friday. So walk me through this. What's the biggest driver here in your mind wrapping up the week with all this strength in beans? Is it simply this soybean meal demand, or is it more than that?
Friday was all about meal. I'm going to call it the meal deal, right? Something interesting happened Thursday afternoon. We all got an email from the exchanges or from our clearing partners that margins for soybean meal were going down $400. Interesting. You're going to take one of the more volatile commodities, and I'm not just saying agricultural commodities, Jesse. I'm going to say commodities as a whole. Soybean meal in the past 3 weeks has been at the top of the list for volatility. Mm-hmm. And you're going to reduce margins? This doesn't make sense. I actually had to call a couple of FCMs to make sure that that was not a misprint, that they were lowering margins and not increasing margins, as I think they should be. So what that does is that opens up a lot more room for speculators to come in and add to their long positions, if they so please. And apparently on Friday, they so pleased. You wonder why the exchange did that. You can start with your conspiracy theories now, if you like. Were they influenced by somebody with deep pocketbooks? I don't know, Jesse. I don't know. That was a very strange thing. And I do think it had a very profound impact on what we were seeing happening on Friday. You can also say that Friday was November expiration. Not a big thing for corn, not a big thing for wheat, although there are cereal months that are in November for both corn and wheat. So there was some of that. But soybeans, November option expiration is one of the biggest ones of the year. I mean, that's our new crop options that we've been putting on for a year and a half now, basically. Generally speaking, you see beans try to gravitate to some big numbers. There's a lot of big numbers or a lot of open interest in $13 puts and calls, $12.80 puts and calls. Not surprising to trade within that 20-cent range there Friday. We spent really all day doing that. So, a couple things at play. From a broader perspective, yes, soybean meal. This is a situation that we've known about. Yes, it was great to see soybean meal exports above 500,000 metric tons on Thursday. But with the issues that Argentina had in their last growing season, keep in mind they're starting to plant right now, Jesse. So we're talking about a harvest that happened 9 months ago, right? 8 months ago. We've known this soybean meal situation was going to be interesting for us and for Brazil because of the lack of supply in Argentina. So for the fact that it's coming to fruition shouldn't be a shocker to anyone. I will say that I think you did get some commercials caught short in the soybean meal complex. You have a bit of a short squeeze going on. If that's coming to an end, which it kind of feels like this move on Friday might have been the blow-off sort of top there. I don't know. We could still have more. It's tough to say. But when that ends, Jesse, you've got a crush that's really rather strong and being even more motivated now with the strength of soybean meal. We just went from, sort of the slower time frame where we get to the tail end of old crop supply to now we're putting the new crop supply into the hands of the crushers, we will start to see that crush ramp up into the 180s, and I'm talking NOPA, not USDA, into the 180s again, up from the 160s. So we're going to, well, flood this market with a whole bunch of soybean meal, and to be expected this time of year. So the meal deal, it has been a big influence on soybean prices. It was a tremendous influence on soybeans on Friday, but that meal deal could be coming to an end relatively soon. And again, you have to take a little bit of, I don't know. Again, I'm not much of a conspiracy theorist, Jesse, as you know, right? I kind of dissuade the idea of the conspiracy theories, but what a questionable move by the exchanges there with the soybean meal margins. And again, I do think that had a very big impact on what we saw Friday.
Should farmers then be considering rewarding the late week rally here in soybeans? I've heard a lot of chatter, some folks saying, hey, basis is good enough in my area, I'm going to take advantage of that, or take advantage of some options for reownership on the board. Should we be rewarding the rally in beans here at the end of the week?
Yeah. Beans are the toughest one. I will say that, I was fielding calls on Friday all day from producers asking if they should sell cash beans. And my answer was absolutely yes. I really do think that is, up 17 to 24 cents is a great opportunity to sell beans, because overall, I still think we're going lower. I don't like the look of the chart. I think South American weather is good enough. Yes, we always have concerns about weather, especially in the beginning half of the growing season. But I think overall, South America looks really good. Exports, even though they've gotten better, they're still not where we need them to be to get to the USDA's number. Keep in mind, you see a lot on like Twitter and social media and these newsletters that guys analysts like me put out, and they say, this is what we need per week to hit the USDA's target. That's a very, very misleading number, Jesse, because we have seasonality, right? Those numbers should be weighted. We can't expect to see those numbers in the peak of Brazil's export season. We need to see numbers much greater than that weekly average during our key export season to hit the USDA's target. So when you see guys putting out here, this is the weekly average and we're above it, oh, that's bullish. No, you have to consider that seasonality. And the fact is that we need to be selling 1.5 to 2.2 million metric tons of soybeans a week to say, hey, we're on pace to hit the USDA's target. You also got to say that ceremonial signing that we saw at the beginning of the week with China, 5 million metric tons, no details provided on that. You expect to see some pretty hefty flash sales throughout the week. We got 246,000 metric tons on flash sales, nothing on Friday, right? And okay, maybe you see something early next week, but man, that's got to be a bit of a disappointment. So again, the strength in the beans, I think, was very much tied into soybean meal. And if you're going to hang your hat on bean prices going higher because of strength in soybean meal, well, definitely take a look at the chart of soybean meal, realize how far it's come already, and then ask yourself how much further it can go now that the crush will ramp up by about 20 million bushels, 20 to 25 million bushels each month, or this coming month in November, then December, November, December, January. I mean, we have the new crop supply coming in. Crush margins are really good. The crushers are going to be going after it. So yeah, I don't know. I think you put all those together and you say, hey, I think this was a really good opportunity Friday to sell some beans. And if there is follow through early next week, I think you take that into consideration as well. And one other thing, because I think you're about to ask me about it, but corn did not want to follow beans on Friday. So what is that telling you?
You're exactly right. That is where I was going to go next, is corn just chopping 480 again here, Ted. And, had we talked last week, we would have said, hey, $5 on the board, D's corn, and, here we go. Woohoo. And then we saw how quickly that bottom fell out of the corn market, just chopping around kind of where we've been for months now. And, to your point, corn didn't want to follow beans. So I think that's pretty indicative of where this corn market's at right now.
October has been an extremely interesting month for corn from a in my opinion, from a technical perspective, from a price action perspective, um, I, I don't know if maybe it hasn't been significant or I've missed it, but I don't think in my I think 18 years now of doing this, I have seen where 3 Thursdays in a row you have a breakout or the beginnings of a breakout happening in a market, followed by 3 down days in a row, down Friday, down Monday, down Tuesday. It happened 3 Thursdays in a row. Now, it did not happen this Thursday. We did not see that big, attempt at a breakout. We went up 2 Thursdays ago. We went up and hit our 509.5. That was our 100-day moving average, and we failed, pretty significantly. So yes, this was a pretty large down week for corn, and it does not have a good look on a chart now. There is going to be some people that are going to say, hey, this is a classic textbook inverted head and shoulders bottoming formation. Man, I think that's a stretch. And we got to get above that 509.5 level to prove that out. The price action that we had late in the week did not feel that way, especially when they had the opportunity to be higher with soybeans up 17 to 24 cents, didn't do it, right? So yeah, I think you gotta worry about the price action that you're seeing. You've got a lot of analysts and a lot of producers, farmers wanting to say that seasonality is such that we usually go higher between now and the end of the year. Yeah, seasonality works a lot of the time. Let's say maybe 70% of the time. But what about that other 30%? There are years that are outliers of seasonality, and I wonder if this is one of those years, Jesse, for a couple of reasons. One, we're trading higher prices than we normally are this time of year. Two, you've got a lot of crazy things going on in the rest of the world, and I think you have to take the global macroeconomic picture into account. Look what the stock market's done since August 1st. We are in a major corrective mode and tiptoeing on the beginning of recession mode. It's finally come to fruition. You had analysts for the last year and a half talking about the potential for a recession. I know we were talking about, hot and heavy. This was a big thing, talking point this same time last year, and it never really happened. Then they stopped talking about it, and now all of a sudden, hey, look what's going on. You've had one of the sharpest rallies in the dollar that we've seen since the middle of July until now, and regaining strength again after a little mini correction. Global unrest, Jesse, that is part of the thing that's fueling the concern in the stock market and everything like that. And then, aside from those two things, you talk about actual grain fundamentals, and for corn in particular, man, I don't know about everybody else, but I'm hearing a lot of reports of yields coming in a bit better than expected to quite a bit better than expected. And I think there's a lot of guys that are finding more bushels to sell that they didn't really expect or plan for, certainly haven't made plans or haven't done anything from a marketing perspective. And I think that harvest pressure is still going to be filtering in here until we're completely done with the corn harvest. So I don't think we're done with harvest pressure. I've been wanting to be optimistic on seasonality, but I've been skeptical on seasonality the whole way. And with the price action that you saw this week, I think that really makes that skepticism about seasonality grow even further. So I worry about what happens next week now that we're getting past November option expiration. Again, I don't know how much more that soybean meal can really pick up the entire grains complex. We've been optimistic about a rally in wheat, but price action didn't feel great about that at the end of the week either. So I don't know. I worry about next week. We'll see.
I'm hearing more of the same on the yield front too on the corn side. So you and me both on that one. Ted, and you mentioned all the world events and the economy. So I know there's a lot of things we need to watch there. I think some of the world events maybe led to the wheat market being down a little bit on Friday. Crude oil, of course, keeping our eyes on crude. And then you throw in livestock too. I mean, what a week in cattle. We start Monday, just a huge down day, and then we come back in Friday and we try to find some buying strength to round out the week. So just a tale of one end of the week to the other, Ted.
Yeah, the gap lower, I'll start with cattle, right? The gap lower that we had Monday morning for cattle, I mean, that was a direct reflection of what we saw in the cattle on feed report.
Yeah,
I don't think we can understate what we saw in cattle on feed. I mean, that kind of represents a change in fundamentals or perceived fundamentals. You can actually say that change in fundamentals had happened quite a while ago, and we we've been seeing that reflected on a chart. But at least from an analyst perspective and what people have been talking about publicly, there's been this narrative of, tight supply. And that is still somewhat true up front, but man, we've really grown we've grown our cattle on feed very significantly in much quicker than a lot of people were expecting. And so that whole narrative of, tight supply going in through the first, second, and possibly third quarter of next year, well, that's kind of a different story now. So, that gap lower follow through there. We kind of saw the dust settle Wednesday, Thursday, Friday. Yes, we did attempt to see some higher trade. Friday was positive. I think that, we can say we're trying to find a bottom here, and I think you can see a retracement to go and close that gap. But I don't know if we're going to be enthusiastic about cattle going up and making new highs. I really do think that bounces from here on out are maybe meant to be sold, or at the very least, looking for some downside protection, line in the sand type things by owning some puts, something like that. I think feeder cattle has made a very, very big statement here just over the past 3 or 4 weeks. I mean, what a capitulation! It really fallen apart. Again, you hope for some sort of recovery retracement, but I think that would be meant to be sold. And again, consolidation, trading sideways. Hey, sometimes that means we're bottoming out. But I gotta say, it didn't leave me with a very warm and fuzzy feeling. Sometimes when you have big moves to the downside, we have to trade sideways for a few days to fix the relative strength index, get it back to a less oversold condition. And we can still see more downside. There's nothing saying for sure that the lows from this move are in here yet, Jesse.
Well, Ted, great thoughts as always. Floor is yours. Final question. Anything else you want to mention today or reiterate to folks to think about here as they're looking at their marketing plans right now?
Yep. So I'm going to touch on wheat just a little bit. And, wheat got a boost earlier in the week on reports that Ukraine was going to take a break or stop with the humanitarian corridor that's been set up between them, Turkey, France, Germany. But then those reports were disconfirmed, I guess. Ukraine came out and said, no, we're back to it. There was about a 3-day period where there was very limited movement for whatever reason. But no, they're saying that is up and running. And so that kind of leaned heavily on the wheat there at the end of the week. Yes, Thursday was a positive day, but we did not get any follow through there on Friday. And we are running up against our 50-day moving average, a very significant level of resistance. We've not traded above that 50-day moving average, Jesse, since the end of July. So, yeah, I don't know. There's you're still optimistic that wheat has reached low enough prices that we can see a longer-term sideways trade bottom, or maybe a bit more of a bounce. But again, I don't feel like you went home at the end of the week feeling very, very confident about that. There's still a chance, still hope. But you don't go into the weekend feeling super gung-ho about that. Crude oil, right? That's all tied into what's going on Middle East. And there were reports early on Friday that Hamas and Israel were in very rapid talks for a ceasefire. And originally that put a fair amount of pressure on crude oil. But by the end of the day, crude oil had reversed and was up pretty decently. I still think there's more upside potential in crude oil. Personally, I'm not an expert on geopolitical unrest. I'm not an expert on Israel or Hamas or Gaza Strip or Palestinians. None of that, right? It occurs to me that this is a age-old, really since the beginning of time, since Crusades, right? I mean, this is a problem that has been around forever. And this time feels a little bit more serious than things in the recent history, right? So I don't feel like this is over. I still think there's quite a bit more upside potential in crude oil. I think, my first thought there back when this erupted, a few weeks ago was, hey, this could be bullish energies as a whole. This might filter into ethanol and soybean oil. And I think soybean oil maybe, but the ethanol one is kind of a problem for me because you talk about unleaded gasoline demand, and that could fall off sharply if we start seeing $5, $6 unleaded gasoline. Demand's already been kind of lagging behind. We've never really gotten back to pre-COVID levels on unleaded gasoline demand. So that really hurts the blend. We're not going to see a big enough switch to E85. There's not that many consumers that are willing to do that sort of thing. I'm one of them. I mean, well, actually, I switched to E85 and kind of stay there as much as I can. But I'm not a typical consumer. Typical consumers aren't going to do that. They're just going to use less unleaded gasoline. So that's going to hurt that E10, E15 blend. I don't think I don't think higher crude oil, higher unleaded gas prices is necessarily bullish for corn and for ethanol. There's going to be some strength in soybean oil. But at this point, after the big meal deal and the short squeeze and what I think is going to be a pretty hefty sell-off in meal coming sometime soon, soybean oil should be regaining some of that market share anyways. So, yeah, I see upside in crude. I think at the very least, producers want to hedge their energy needs for the spring, buy calls, things like that. I don't know if you want to play with, long futures in crude oil with we talk about volatile markets, Jesse. Wow, that is a volatile market. But there are things that you can do to protect the upside of your fuel needs for the spring, and I think you should be looking at something like that. But again, I want to stress that I don't necessarily think that higher crude prices mean higher commodity prices as a whole. I think higher crude prices put pressure on the stock market, put pressure on consumption, put pressure on the economy, which therefore is deflationary and therefore is negative commodities. And in particular, I don't think it helps corn. So for those saying that higher crude is better for ethanol, I think they need to think about that a little bit more.
Ted, if folks want to reach out to you and get some advice, talk markets with you, I know they could do that very easily. How can they reach you?
Sure. I mean, I'm easy to get a hold of. My direct line is 312-277-0113. Aside from that, you can find us on the web at www.zaner.com. I'm doing an afternoon, just a 5 to 7 minute update. I talk markets. You call in, you listen to it whenever is convenient for you. It's always done around 2:30, done by 2:30-ish, 2:35-ish, something like that. So feel free to sign up for that. And aside from that, you can find me on Twitter I'm at the Ted Spread, or X. Sorry, whatever. It's Twitter.
X,
it's always
Twitter, X, the X Twitter, whatever you call it. Something like that. Well, hey, buddy, we do appreciate the time as always. Ted Seifried, Zaner Ag Hedge. Thanks for joining us on Market Talk this week, and we'll talk to you again soon.
Absolutely. Thanks for having me, Jesse, as always.
And that's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great weekend.